Subscribe and click on the bell icon to be the first to see the latest videos.
Am I audible? So I think after a good lunch, maybe my session is not that boring. When I heard that the people are more from the finance function, I have tried to go more into the details. So it's more of a detail-oriented rather than some, slides, etc. Few things. I will share this presentation later, so I would maybe ask people to focus more onto the content. I'll share the slides later with you. Second declaration, this is in my personal capacity. Yes, Capgemini do offer the services, but what I'm talking over here is based on my past experience and what should be done for, by the finance function within the organization. So the topic is fraud risk management in the technology-led finance. Now, every company as of today, if you look at primarily, they have multiple number of applications. ERP is the key which every finance professional work with. Then in addition, we have multiple like operational applications running across every company, analytics, etc. So that poses a risk which at least I have seen in my experience, both first as an auditor, then as an implementation of ERP professional, then into the IT and business risk consulting, and finally, when I myself delivering or running the shared services for Capgemini, I'm able to see the entire side of it. Okay. So first thing, are we doing enough to minimize the risk of errors or fraud? And so if I look at in the shared services, as I mentioned, there are multiple applications. Our focus will be primarily BPO and shared services, which are more of people and technology intensive both. So introduction, every company has multiple applications, and if I was reading some research report, at least 50 to 60% of the data of every company is more or less into the digitalized form. Okay, so that being the case, the control over the data become greater importance. Now you must have seen the data privacy, even the data privacy bill coming in India. Earlier there was at least more of a risk of information threat, but now apart from that, the information threat, it's also the data privacy which is prevalent. And on top of all that is finally the risk of fraud. On an average, companies lose about 5 to 7% of their revenue, annual revenue, due to fraud and wastage of the resources. Some companies are able to investigate or find out the fraud, or some companies are not even aware that the fraud is happening or there's a revenue leakage happening, again between 5 to 7% depending upon industry or so. Now, I personally believe, being a finance professional and working with a lot of technologies, if you are not aware about the technology risks, if you're not aware about the nuances of the technology, somewhere or the other, we are bound to become the impaired asset. So, maybe if I speak to people 5, 7 years back, they were more of a finance professional. It's a transition, and slowly, I believe the IT probably will drive more of every function, including finance or HR, etc. So if you look at the current scenario, there are common frauds which are observed in the corporate world in the nature of excess payment, frauds, data theft, e-commerce frauds, etc. And there are various measures which are adopted by the organizations in the nature of internal audit, having their own internal controls team, or the periodic awareness and the tone at the top, etc. Now, every company uses a combination of all these. So obviously, there is no one single formula to say that this is what is meeting all my requirement. But depending upon the company, people do use it. The common challenges are people feel that the fraud risk through IT is not my finance problem. That's a misconception. So they feel that it's a IT problem. But you pick up the history of any company, wherever the fraud happened, the first person to be caught was the CFO, not the CIO. So if you talk about the financial fraud, okay, within the company. So from that perspective, these are the challenges where people feel that fine, I'm responsible for finance, I'm responsible for IT, but it's basically a bridge, and it's a joint responsibility. Testing of too many controls, insufficient commitment from the senior management. And again, if I look at from the legislations of late, there have been a couple of them. Insolvency code, companies that came out with the provisions relating to the penalties for the fraud, etc. So from that perspective, things are becoming better. The fraudsters are getting, kind of cautious. But at the end of the day, these legislations are kind of slow in terms of implementation, and that's still, there are a lot of frauds, as I said. Apart from reported frauds, if you go to any company for that matter, there are good amount of unreported frauds, and which is hitting the companies. So broadly speaking, if you look at the frauds, three types: asset misappropriation, financial statement, and bribery and corruption. Now the recent trend, we see more of the cyber crime, which is, through the financial theft, through the hacking, email spoofing, the use of mobile devices, etc. So for today's discussion, I'm focusing more, as I mentioned in the beginning, into the first three parts, which is the asset misappropriation and the financial statement fraud. Corruption, bribery, we deal with primarily through the ethics and compliance policy, so I'm not going much into that. I'm focusing more into the financial fraud, financial risks in my discussion. Now, what are the potential frauds? This we probably covered in the previous slide, but what are the key reasons? There's the lack of policies and procedures, excessive access rights or the segregation of duties, to the people. Now, this I've seen when even I implemented ERP. We provide a lot of access to people and to say that my business should not suffer. And with that, once the person has got that kind of access, then obviously there are vulnerabilities left in the system which can be exploited. Lack of controls, adequate skills to test. Now, given this scenario, and especially in the shared services, if you look at within every organization, we process thousands of invoices on a daily basis. We collect customers from clients. The payments are made by the junior most resources within the team, etc. Now, in that situation, how do you get a comfort or a control that I have not made double payment, excess payment, etc. Be it the employee reimbursement, probably that's a lower amount, but supplier payments, again, I'm saying, even if you go to the best of the best ERP implementation, still there are a lot of, the loopholes which can be plugged. So we probably will be dealing in detail into the second half in a workshop, but there are issues, and obviously you cannot just place reliance onto the ERP. The key controls primarily, the organizations normally rely on, they say that fine, we rely on the verification done by the team lead or by the internal audit, SOX compliance teams, etc. But if you look at the today's technology environment, are you sure that they have the sufficient skill set? Because my experience with at least 50 to 60% of the internal audit teams, when I speak, they primarily check the business and the manual controls. The focus on the automated control is missing, while IT is the driver, and probably I should say, I should first focus on technology and then I go into the manual. At the end of the day, business risk definitely is important. And how frequently you review the anti-fraud measures. I've seen few companies, there's a concept called, and now of course with IFC coming in since 2014, we check a lot of controls. But again, if I talk to the multiple CFOs, the IFC controls are a kind of a replica or a similar to the SOX, but still this remains on paper. I've seen companies, they just prepared certain documentation just to please the auditors, go about it, but at the end of the day, the risk of fraud is kind of still not mitigated. So here are some examples, when I talk about these configurations or the system, etc. For example, the tolerance limits or certain application controls. Now these are enabling or disabling a single tick in the system or defining some parameter. But believe me, this tick's enablement or disablement causes a lot of difference to the business. Here are some examples. The United Airlines, these are examples from 2013-14. One of the system configuration changes led to the flight ticket being available at a zero cost. Okay, it was for some time. Business, identified and then kind of immediately rectified it. Or second one, in case of Walmart, someone happened to change the configuration, as a result of which the products which are available, let's say for $600+ were available for, with throwaway prices. So ultimately, I'm talking about not only risk of fraud, I'm talking about risk of fraud and error through technology which can ultimately lead to business loss. Now, so this is kind of an importance of why we need the technology and why we need the risk of fraud into the technology environment. Let's look at some key findings from the ACFE, this Association of Certified Fraud Examiners report for 2018. If you look at a few key things, one, lot of people, they depend on tips, internal audit function and management review to identify the fraud. Can you imagine? Tips is the major source for organizations. So if someone is not intimating, that means company is not even aware that the fraud has happened. So they have taken about 2,690 cases across 125 countries, and the median duration of the fraud scheme goes on for about 16 months. This is the data from that sample of companies. Second, the amount of fraud through the collusion of employees obviously increases, or if it's a single employee, the possibilities are lesser. Internal control lapse is the biggest contributor to the accounting and the financial frauds. Now, again, we had this provision in CARO, we have this now in Companies Act, but still, again, this is my experience, most of the companies, they just go and tick box or provide some data to the auditor for getting a positive opinion. But if there are strong internal controls, the frauds are kind of deterred to a certain extent. But that's probably more than 50% of the factor which contributes to. In terms of the occupational frauds affecting the organizations in various industries, you can see the number of banking, manufacturing, healthcare, etc. The numbers on the higher side. However, the amount is higher in case of the communications and publishing industry. This is further split within the internal controls, how that contribute to the risk of fraud. Whether there's a lack of management reporting, whether there's a lack of internal controls, whether this is override of the existing controls. So some of the companies says that I am the CFO, I need the entire access, right? Why do we need it? At a CFO level, I only need to see the data. I'm not supposed to book the accounting entries. And that's what happens if you provide that kind of access. People kind of commit transactions in the system which ultimately lead to the risk of fraud. What asset misappropriation scheme present the greatest risk? So this is check and payment tampering. So doesn't mean only we writing the physical check. Even the electronic payment is kind of covered of that. Next to are billing and the non-cash transactions. Again, this is a heat map. So if you look at the major ones, these are the three. Obviously, apart from that, there are, cash larceny, skimming. A lot of people do provide focus more onto the payroll. But if you look at the payroll, at least as per this report, the magnitude of the fraud is on the lower side because we still have some good amount of controls in every organization. This is a matrix which demonstrates the maximum, the most common occupational fraud schemes in the various industries. So we have the various industries over here, and on the horizontal we have the various types of functional frauds which take care, which are conducted. This is interesting, what kind of background checks which we perform on the perpetrator. So it's like, I've heard about employment history, reference checks, education verification, etc. But if you look at the checks were performed for the criminal checks and the credit checks, again, in this sample of 2000 odd survey, despite that, you have seen the result in terms of the fraud, etc. Which departments are posing the greatest risk from the occupational fraud? So it's executive upper management, accounting and operations. And account, as I said, that's the reason my focus is shared services. So, when we talk about accounts, either it can be the decentralized function of accounting spread across the geography, or we have a centralized function which caters to the entire, organization needs. This again is a matrix which says between the various industry, the functions versus what kind of frauds which are prevalent. So, for example, if you look at accounting, the major ones are with respect to billing and the check payment. If you look at the executive and the upper management, more is in terms of billing, and the other one is with respect to the the financial supporting or the reporting, etc. Another interesting thing, if you look at what kind of most common frauds which are there in South Asia, Non-cash billing, expense reimbursement, scheming, etc. So, the one which I highlighted in the red color on the left-hand side, these probably account for more than 50%. Non-cash billing, expense reimbursement, scheming, majorly being delivered by every organization as part of shared services or, the BP organization. Again, if you look at on the right-hand side, the major source of detection is tips by 53%, internal audit 13%, management review 10%, and surprisingly, IT controls at the bottom just 1%, which can change or which can reverse the situation. But it's a reality which is coming on from the survey. I'm not saying that this should be the model of implementation. I would say it should be other way around. So my IT control should be on the top and my tip should be at the bottom. That should be the reality. What kind of anti-fraud controls normally, there's a list of anti-fraud control every company which we go back and see. So most of the people do place reliance on external auditor. So, when we go and tell the management, now, even after the IFC, it is part of the law that the board is responsible for deputing the controls or, maintaining the controls and then reporting to the auditors, etc. But they say it's the responsibility of the auditors to identify and detect the fraud, okay? Which again is a big debate. But if you look at the anti-fraud controls, organizations do feel that my reliance on external audit, internal audit, and the code of conduct. And you probably would know what is the reality of the code of conduct. We prepare a code of conduct, we get it signed by the employees when they join the company. But I have conducted certain interviews on the floor with the people to understand if they know the ethics policy of the company. And you'll be surprised, hardly 5 to 10% of people are able to say or are able to articulate what is the policy. Rest is, fine. They've signed and it's a tick box which they have completed. Sorry, one more interesting thing. If you look at the cases of by country in terms of the fraud, India ranks highest in the Southeast Asia. So that being the case, and again, if in this area, if you look at, most of the shared services, even for the foreign companies, are residing in India. So either they are, in Guatemala or in Europe, like Poland, etc. And the third destination, or the first destination, I should say, is India. And with this kind of number, obviously, it's kind of alarming because anything can happen if you don't have the adequate fraud risk controls in the organization. Now, this is just a summary of what we discussed. And again, one more thing, the losses caused by men were 75% larger than those caused by the women. This again is some finding from the study. Now, there's a clearly need for the fraud risk framework. So the objective of highlighting this report was, it's a published report, you have the data. So, given that, obviously, organizations, in my opinion, need to think through and have a framework by which they are able to proactively address the risk of fraud rather than be reactive after the fraud has occurred. Okay, so there if I look at we have the traditional model, which is either we have the lack of the anti-fraud policies, the reliance is placed more into the manual controls, controls testing is being done on a sample basis, etc. And lastly, important thing, it does not provide me adequate comfort onto the entire volume of data. I give one simple example. I have audited telecom companies. So if let's say that the turnover of the company is to the tune of let's say 40-50,000 crore with the average recharge value of 10 to 12 rupees, that means I'm talking about let's say 2,000 records or 3,000 records being available. There, even if you take thousands of sample as a data, it is not going to give me that kind of confidence. So what will give me the confidence? System audit. So, if I'm able to place reliance on the technology, I will be able to succeed and get better reliance. Otherwise, it's difficult. So that was a traditional model. The proposed thing is we have the well-defined policies, strong governance, which was again missing, reliance on fraud analytics. So earlier it was just the analysis of the transactions, but of late there has been a trend of having the analytic solution analyzing the health of data with various analytic solutions, and then taking a call as to where do I stand in the entire risks. And then obviously the ITGC application controls, etc., which again we will see into the the case study into this little later. So the proposed risk and compliance model is we should consider the all 4 to 5 factors, which is the configuration controls, master data, transaction controls, segregation of duties, IT controls, etc. Strong governance mechanism which is required, and then we have the ongoing assurance. The most important part of this entire thing is the fraud analytics and governance portion need to be increased, which is definitely kind of missing as of today or is not that effective. So coming to the solution parts, we have seen kind of importance of the fraud risk. We have seen the report as to what are the numbers based on the latest report. Now with all that, then if we have to address the risk of fraud with a technology solution, so obviously first we need to be defining the objectives, identify the various stakeholders, identify what are the key applications which I'm going to be running, because as I said, I've seen organizations with 100+ applications. Are they driving the best comfort out of it? You have to prioritize that. So once you have to prioritize as an outcome, you need to have the custom queries and test procedures which you identify as part of this entire exercise. Then the next step comes is the execution, where you run the report, or maybe I'll just go into the... You run the reports, and once you run the report, then you kind of try to identify whether there is really a fraud which has happened. So for example, what happens? I give one simple example. How many of you perform the duplicate invoice analysis in your company, apart from the ERP, etc.? So once you perform the duplicate invoice analysis, so let's say for example, you are processing 1,000 invoices today for various clients, etc. My system is bound to tell me that fine, according to me, let's say there are 100 invoices which are potential duplicate. Because we run the criteria on the basis of maybe the supplier number, supplier name, amount, invoice number, invoice date, a combination actually, okay? And depending upon which combination you use, you are bound to get certain result. So in some cases, so it's like a funnel actually. The more stringent you are, the more better result you get. The more liberal you are, more number of false positive you get. So once you analyze the, the data, and once you run it pass through, then you are able to identify, fine, these are the invoices which have to verify and which have to be vetted by someone before running to a conclusion that, fine, are these the real duplicates or, system plugged it or system interpreted as a potential duplicate. So once we do that, then obviously we kind of identify the various parameters as a result of which this invoice was either about to be paid, which I kind of prevented, or second alternative is it is going to the detection mode, and then obviously we go into the recovery from the clients. Now third part is important, where I have prioritized the applications, I have identified the fraud risks, and sorry, one more thing which I forgot in the first one, planning and risk assessment, is identifying what are the controls I'm going to test. So again here, this is more of a technology solution. So we need the expertise of the ERP specialists who understand the in and out of the ERP, again from the risk perspective. And the more we are able to test from the ERP controls is better as compared to the manual controls. And obviously, once then we get the data, finally we should test the controls. Second thing is, rather than placing reliance directly onto manual controls, at least what I recommend is, try to place reliance on automated control. So I give a very simple example. Every company, every ERP which we have, there's something called the tolerance limits. So that means when I'm defining the system, and here is where, there is a, something between efficiency and the risk. So if I define that, fine, I am comfortable with a tolerance of, let's say, 20% or 5,000 rupees, just in Indian scenario. Or alternatively, I will say I'm comfortable with a 5% tolerance or maximum 100 rupee difference. Because in either situation, the number of invoices which are going to be questioned will be lower in the first scenario, in the second scenario as compared to the first scenario. So what are these kind of controls which are kind of dominating and putting or questioning the data before they are processed? That tells me how much of automated controls reliance I can have. Second thing, when I'm deep diving into the analytics, again I've seen companies, they do a lot of data analytics without any analysis. So they will have the entire GL dump and then they will kind of perform the analysis. They will have the entire accounts payable data and then they will perform. The model which I recommend is rather, first of all, run through your technology controls, identify what are all the gaps which are there. So for example, in this example which I talked about, if my tolerance limit is 20% and 5,000, that means then I need to focus only on the invoices where my invoice amount is more than the purchase order amount. Because so long as that amount is same, I don't need to run that kind of analytics. Or alternatively, second case, if out of my 200 users, if I have got only 2 people who are defined as super users, I would probably focus more onto these 2 people who have got the super user access, because rest of the people anyway will not be able to create a damage, right? And they are processing probably 80% of my volume of data. So that's the third point where we analyze the exceptions, we identify into false positive and the real exceptions, and determining the sampling methodology. But once you identify the gap, then it is critical to identify what is the root cause. So for example, every company, and I can say, despite of the best of the controls, you will observe that there are certain duplicate payments, despite the best of the controls, okay? Maybe the volume might be very, very low. There are duplicate expense reimbursements, etc. But at the end of the day, then what is required is we have to understand what is the root cause. So if my control lapses were there, without any control, I can understand. I need to plug it either through technology or through the manual controls. If not, then obviously then I have to layer it with the additional layer, the so-called GRC. For example, we have SAP GRC in case of SAP Oracle GRC, which provide a solution over and above the ERP on these kind of areas which are not directly supported by the ERP. Lastly, it's the sustenance and improvement, which primarily come from one, the governance. When I say governance, probably, again, some of the organizations simply deploy some person or member of the audit committee, etc., and they say that we do monitor it. But what is important is a kind of a taking stock with the actual data, with the help of internal auditors, the technology audit team, etc., and then kind of driving the program as to where were we, let's say 6 months to 1 year before, where are we today, have we kind of improved, or what are the kind of reasons, which areas those frauds are. Awareness. This is again, and which is very prevalent I've seen into the shared services. People do send email with an Excel file, duly password protected, but the surprising part, they mention the password within the same email. Or then they will send, or alternatively then send another email followed by that with only the password. But that being the case, and when I ask them, they say fine, it's not, I'm going to say it's a practice, nothing has happened. Aaj kuch nahi hua, kal nahi hoga, same thing. Or segregation of duty, I give an example. One of the guy, from my team come back and say that I'm responsible for, invoice booking, etc. But I need to book some journal entries at the end of the month, etc. And I say, no, I'm not willing to provide that access. But the person says, if we don't do that, I will have to wait for the other team to update the entry for 2 hours, etc. I need to be sitting late at that time, and we are running into the inefficiency. So that's the reason I said it's a more of a balance between either we get efficiency or we get the control conscious. It's up to the organization what kind of balance approach they take. Next is monitoring the dashboards, control dashboards. Again, if we have list of the various risks, various controls, etc., and which are monitored versus expected result versus the actual result, and then again kind of deep diving into the root cause, which I mentioned into the previous point, which is finalize exceptions. Follow up and monitor status of remediation. How many of you, for example, again I've seen internal auditors do come up for the implementation status of the previous audited observations. And believe me, including me, when we deal with the auditors, we are always trying to somehow say that this point is closed. Okay? And I think we're successful in that as well. But believe me, the devil resides over there, because at the end of the day, if the exception have been highlighted, have been not fixed, it leads to the problem. I've seen some companies, the framework is really good. They say that if I observe an exception in the previous year, the severity of the exception might be low, but next year, if I find the same exception, my severity is going to be high. Because this is something which is kind of continuously going on, and the frauds start with the smaller problems and then spread across with the amount bigger and bigger. So unless and until you fix the problem, and with that kind of model, I think people are used to that environment where they say, fine, if auditor come next time and if they find the same exception gap, then they are going to be rating it as a high risk, which probably go against them. And lastly is the continuous improvement and the report to the management. So again, I don't know in your companies, do you have the model where we present something called a risk insights or an outcome of such kind of data to the management on a periodic basis? I've seen companies where they present to the audit committee or to the risk committee something which I said like IFC, they have the key financial controls, and the dashboard is kind of presented month on month, demonstrating where we are or where we were in the previous month, where we are currently, why there are gaps, and how to kind of plug them. So I'm going to say unless and until that rigor is there, it is not going to be successful. So that's the last slide. Governance, fraud analytics, and lastly, I'll just take one more minute for artificial intelligence. I have not seen any solution yet which talks about the artificial intelligence. I've seen more of robotics, which is mundane, or what I do in Excel is being done by some robotics in terms of the calculation, etc. But artificial intelligence is a step ahead, which apply their own intelligence, which a control specialist would have applied and given you some insights out of it. But yes, I've been reading a lot onto the net in terms of next wave of artificial intelligence addressing the the risk centers or the risk committees, etc. But I think these are going to be the focus areas in future. Any questions? Onto internal audit, onto fraud, onto, yeah.
For me, the question is probably more at the more detail level, because something that I haven't seen come up in a question of discussion with us as well. Now, if you move towards this digital age, we still in India to a large extent get paper-based in terms of employee expense reports or other things like this. And one of the key reasons is obviously also to prevent fraud to some extent. So a classic case could be that you get, as you said, multiple expense reports being submitted, or the same invoice being submitted month on month as the same.
In a paper-based invoice.
In a digital mode. In a paper-based, obviously you get the invoice and it's sent out. So
that doesn't matter. So, okay.
So how, with a company of your size, with the kind of volume that you deal with, do you address some of these concerns?
So, it's difficult in the expense. So, for example, in the expense, let's say, for example, same employee, and I've seen when I run, my team run that analysis and says that, and I publish the potential duplicate, then the employee come back and say, hey, I went to this place, I did the car parking twice in the same place, in the same premises on the same day. That's the reason you are telling me it's a duplicate expense, while in reality it is not. Or some way the people bypass is, there is something called an invoice date and there is something called a printing date or a publishing date. So I come to the technology part onto the invoices actually. The control which I reside upon is invoice number, invoice amount, supplier name, not just the supplier number, and then I run through the combination of that, as I mentioned into the duplicate invoice analysis. Irrespective of whether it's, so for example, in case of paper invoice, it is stamped and said that booked on so-and-so date, etc. That means the same invoice cannot come twice, okay? In case of digital, that number is locked in the system. A combination is locked in the system, and over and above the ERP, I perform an analysis on this parameter which I said. I can share the detail later because I have a separate presentation which I deal on as a faculty onto the Institute of Chartered Accountants of India. We have a model called SSD, same, similar or different. So my supplier number might be same, my supplier number look to be different, or my supplier name look to be similar. So for example, if I submit an invoice to you, the invoice name may be as Ajay Gupta /01/2019-20. It can be AJYA instead of AJAY, etc., etc. So I have designed certain mechanisms by which system will say this combination looks similar, so it is suspicious to me. You please go and verify. So with that kind of thing, while you do, because for us, while we are doing the transaction processing, it is not at all the paper processing. For me, I get all invoices duly scanned by my scanning partner. Hardly there is a percentage of paper invoices, but for me it is a digital image. I get the digital image, and thankfully, recently I conducted an audit with an external company, and there were hardly any invoice which could have gone into the potential duplicate I'm saying. So yes, I think it's more of a, as I said, it is control is not there in the ERP. ERP only checks for invoice number, amount, and say that it's a duplicate. I give a very simple thing. While you're booking invoice, put a space, because when you print the invoice, space is not visible. But for system, it's a character, and that character differentiates this invoice number with the previous number. So to that extent, at least I don't play reliance directly onto the ERP controls. I run a program over and above the ERP to get comfort on this. But yeah, that's a good question, because again, 40 to 50% of the people whom I'm inquired, they rely primarily onto the ERP control rather than some other controls.
Thank you so much, Ajay, for that lovely presentation.